The way you introduced me reminds me of this one comment on one of our previous videos being like, "Who you gonna have this guy on your show as a guest and not introduce him?" And I was like, "Been here the whole time, man." All right, what's up, everyone? Welcome back to yet another episode of Zillennial Money. I am always your host, Andy, the world's greatest podcast host, and with me I have our two other hosts. So this is episode 31, I think we're on. So yeah, I've got a pretty loaded show for you guys today. But before I jump into it, let me pass it to the guys for a brief intro in case we have audience members who are new.
Hey, what's up, everyone? If you don't know already, this is Dominic. So please be sure to leave a like, comment, and subscribe to this channel as well as our clips channel. And let's get started.
Tristan here. We've got a packed show for you today, so I'll toss it back to Andy to take it away. Now we're trying this new thing where we're doing a hard cutoff at an hour and a half. As to respect everyone's time, because I know we've gone on for like 2+ hours before, and it's a bit tiring for all of us and audience members included, I'm sure. Let's not waste any more time and jump right into it. So our first story of today is Bitfarms. Now, I know we haven't talked about Bitfarms in like 2 or 3 weeks now. Everyone's like super itchy to talk about this news. So let's just get this story out of the way first, and it's a big one. So in case you guys haven't heard, Bitfarms recently announced their intention to acquire Stronghold Digital Mining. Now, it's more than their intention, actually. So they actually already signed an agreement, and this agreement was approved by both the board of Bitfarms and by Stronghold themselves, if I remember correctly. So this is pretty much a done deal in case, unless something like crazy happens, but 90% chance this is going to be a done deal. So this is not like when Riot tried to buy Bitfarms, where like Bitfarms didn't agree to it and Riot just like went out guns blazing. But with this one, it's actually like a mutually agreed upon thing that it is going to happen. Now it's expected to happen in Q1 of 2025. And it will be an all stock transaction, meaning that Bitfarms is just going to offer stock to anyone who's Stronghold Digital stockholder, and this deal is valued at 175 million US dollars. So it's quite a big deal because I think Bitfarms is only at around $1 billion of market cap. So this deal is like almost 20% of the entire market cap of Bitfarms that they're going to spend to acquire Stronghold. Now, why are they doing this, right? So they explained through a press release, and I believe they also had a call with Ben Gannon, the new CEO of Bitfarms, where he explained his intentions. But just to sum everything up, why Bitfarms is doing this is because they want to obviously expand their power capacity and expand their exahash. So what this will do is it'll add 4.0 exahash to Bitfarms' hash rate pretty much immediately after this deal closes. And it'll also give them a runway to add an additional 10 exahash. So, or I guess maybe an additional 6 exahash on top of the 4 exahash they just added. I think that's kind of the intention. Correct me if I'm wrong on that. It's going to give them more runway to expand their exahash. It's kind of the point. And I think the biggest news around this is also their power expansion. So with this acquisition, they provided a clear path to 950 megawatt active power capacity. This will put Bitfarms nearly in the gigawatt hour kind of range, which is quite an achievement, right? And basically, it gives them land as well. So they're acquiring 2 new sites. So there's one in Scrubgrass and Panther Creek, and I believe that both of those are in Pennsylvania, if I'm not mistaken. But essentially, after this deal closes, it'll be kind of a 50-50 split of Bitfarms' infrastructure holdings between the US and everywhere else in the world. So I'm sure you guys already know Bitfarms has operations in Argentina, in Paraguay, and in Canada, as well as some in the US, but this will significantly add to their US holdings so that they'll achieve a 50-50 balance between US and rest of the world. So they're kind of, geographically more balanced, I guess you can say. I know that some people were criticizing Bitfarms previously for, being too aggressive, like overseas. And, some people weren't too comfortable with them investing a lot of their money in Argentina and Paraguay, which, face it, are places that are not known to be the most politically stable places, right? Although recently, South America's gotten a lot better, but historically, a lot of U.S. investors, since this is a company that is publicly traded mostly in the U.S. and Canada, I feel like U.S. And Canadian investors are more comfortable with holding a stock whose operations are mostly in North America. So this will definitely add to their American holdings. And yeah, basically, I got this slide of just kind of them summarizing. I think this was from Stronghold on why they're like happy about this as well. So this is from Stronghold's presentation, and this is kind of their reasoning as to like this is kind of like Bitfarms' reasoning as to why they want to acquire Stronghold. Like it's all like a bunch of good points about Stronghold and why Stronghold's such a good company. And yeah, basically that's the news. And also, I shared this from Dr. Lewis, who, if you guys don't know, he goes by the name Charge Stack, is his handle on Twitter or X. And yeah, basically he's saying that one potential play, if you are bullish on Bitfarms, is now with this deal you can get into SDIG, which is Stronghold. So because they're doing this all stock transaction, one share of Stronghold will convert to 2.52 shares of Bitfarms. If you and basically what he's saying is that if you buy it at $5, which I believe is around what SDIG is trading at right now, you're basically buying Bitfarms at $1.98 US once the conversion happens. So I believe he said that that's exactly what he's doing. He's stacking shares of SDIG now, which once this deal closes, it'll like kind of give him a leverage on increasing his Bitfarms position. And yeah, this is the main concern, I guess. So when Bitfarms announced this news, the stock dropped like 5% immediately, and usually this is like some people were like panicking and like asking why and stuff like that. Usually this is actually pretty normal, right? So when a company gets acquired, the company who is being acquired, their stock shoots up, obviously, to the acquisition price. But then the company that is doing the acquiring, their stock usually drops because investors are afraid of the extra, stock dilution and all the money that they're going to have to spend to do this deal. And with Bitfarms, they're doing an all stock transaction, right? So they're going to hit that ATM really hard and dilute a bunch of shares to do this. So Dr. Lewis says his estimates is about 73 million shares that Bitfarms will have to issue to complete this deal. So, given that they have like 400 something million shares outstanding, it is a significant chunk, not gonna lie, right? Like it's a lot of shares, and there's gonna be quite a bit of dilution, unfortunately. However, as I said earlier, if you just look at these two bottom graphics, this is kind of like the before and after of what happens after Stronghold is acquired and integrated into the rest of Bitfarms. So they'll go from 648 megawatt hours to 955. And then, this is, I believe Scrubgrass and Panther Creek, they're both in Pennsylvania. So it's going to add to their US holdings. And then they also already have a smaller facility in Washington State. Bitfarms does, which is at 20 megawatt hours. But then Scrubgrass is 147 megawatt hours, and Panther Creek is 160. And then there's opportunities for those to expand to 320 something megawatt hours. So basically, like a more than a double for those. So yeah, basically, that's kind of the deal. And yeah, I wanted to get you guys' thoughts on it. So I'm going to reserve my thoughts on the end, but I guess we can pass it off to our in-house local mining expert, Tristan Jones, to give us his opinion on this deal. So I'm very excited to hear what you have to say, Tristan. Do you like this deal? Do you not like this deal? Do you think that, like, would you have done this, or like, do you think that they negotiated a good price? Any and all thoughts. Just feel free.
The way you introduced me reminds me of this one comment on one of our previous videos, being like, "Who are you gonna have this guy on your show as a guest and not introduce him?" And I was like, "Been here the whole time, man." Yeah. So for the with regards to the Bitfarms acquiring Stronghold deal, I must confess I never was particularly impressed with Stronghold's setup. I thought that Stronghold was not particularly well placed compared to other Bitcoin miners. It had a relatively high cost, if I recall correctly, as well as they have their power generation is not particularly clean. It is maybe cleaner than it could be, but it is still using fossil fuels essentially to and emitting greenhouse gases to power their current facilities, which I think is generally something looked down upon, particularly when you have a company like Bitfarms, where almost every single one of their almost all of their energy production is coming from clean sources. So from that perspective, I think that it's not exactly it's not exactly ideal to be moving towards a less green perspective. Is it the end of the world? Not necessarily, but again, it's still something that may turn people off from the company a little bit. Particularly if you're concerned about the environmental impact of Bitcoin mining. With regards to their evaluation at approximately, I think it's approximately 175 million USD that they're acquiring for after the is it 175 or is it 125?
It's 175, and 50 million of that is Stronghold's debt. Right. So it's 125 for the company itself and 50 mil for the debt repayment that the farms will have to take on.
Right. I thought I had the right numbers, but turns out I do. Yeah, so at 175, I think that I can understand why Bitfarms would obtain it. I can also understand why Stronghold would accept the offer, because from Stronghold's perspective, Stronghold was sinking, I think, is really what it comes down to. They had too much debt. They had, for the amount of revenue that they were generating, and they're basically in a scenario where they couldn't invest into the company sufficiently to grow it, to turn it from this toilet bowl that they were swirling around in. They were kind of heading towards the drain, I would say, and they didn't really have enough momentum to get out of that scenario. Whereas Bitfarms is clearly not in that scenario, and they have Stronghold represents a lot of value in there if you can deploy sufficient capital to take advantage of that land and that power generation that's available. So from that perspective, I think that this is an area where Bitfarms has a lot to gain because of the fact that they have more capital. They don't have the debt. They don't have they're in a particularly bad financial scenario right now. So there's a bit of an opportunity here for them to invest heavily into these new acquisitions, these new locations, and really get them up to speed and with higher monetary generating either miners, HPC, however they want to handle it. They have an opportunity here where they can basically take the good stuff from Stronghold because they've just got the financial backing to avoid it. It's kind of like if there was a let me think of a good analogy. It's kind of like if you're trying to buy a bunch of land and there's a like a dump on it. Bitfarms has got enough money to get rid of the dump and then use that land for whatever it wants to do. Whereas Stronghold, it was just in a scenario where everything was just getting worse. So I think from that perspective, I think Stronghold managed to get a pretty good deal for itself, in the sense of their shareholders should be maybe not super happy because they did have previously a much higher stock price. But I think at this point, I would say if I were a Stronghold shareholder, I would be very happy to not be going bankrupt and instead gaining something for my investment. And well, you can say that 2.5 shares of Bitfarms may not be the most it's not like a bull run price where they had something like $20 or whatever they were worth when Stronghold went public back in the bull run. I would say that this is still pretty good for a company that may have just gone under at some point in the not too distant future. So I think it's like a scenario where we've kind of got an acquisition that's pretty good for both sides. And I think that Bitfarms expanding more in the States does have a lot of value in the perspective of if America continues its stance of being moderately pro crypto mining, or at least maybe not pro, but not necessarily against, then having some of their facilities having more facilities in America so that they aren't as at risk of a Paraguay issue, maybe a good way to rebalance that. And then as well, they have locations that are moderately close to the Stronghold locations as well, which could create some opportunities for moving miners between the locations if there's an issue at one or another, so that there's more flexibility on that front. So it's a bit of a weird scenario in the sense of like I think that Bitfarms itself is probably overpaying for Stronghold, but I think that they have gained sufficient value from that hopefully it works out in the long term. How well it does or doesn't will remain to be seen. But I think that at the current state, I think that this acquisition basically represented a good deal for both Stronghold and Bitfarms. And I think that's probably really what it comes down to. And maybe Bitfarms didn't get as good a deal, but they did acquire a significant amount of land and a significant amount of power that they can now apply with their larger capital stack compared to Stronghold. So it's just I'd say overall overall Bitfarms will end up being stronger because of this. I think it's the convoluted route.
Pun intended, they'll become stronger
Yeah.
by Stronghold. Yeah, no, great. I agree with like pretty much everything you've just said. So I think my opinions are very similar in that I do I like this deal a lot better than a lot of the other deals I've seen, especially like if you compare it to HUD-8 and USBTC, right? Like that was another deal that we heavily scrutinized here on the show. And I think the deal was announced before we even made this show. So like you guys didn't get like a live reaction, but we did talk about it for episodes and episodes when we started this show. You guys can go back and watch those episodes if you want. But basically, we were like scrutinizing that deal, and basically, we were like, yeah, that was like a terrible deal. Like USBTC was like gonna go bankrupt for sure, right? And like I know, like Tristan, you just said Stronghold. You can see Stronghold going bankrupt, but like I don't think the situation with Stronghold now is as dire as it was for USBTC back when the HUD-8 deal was announced, right? So I think that this was like, you know, I get what you're saying with like the Stronghold maybe on a trajectory to go bankrupt, but I don't think it was as bad. But Tristan, you wanted to, yeah.
I think I disagree with that statement. Actually, I think that Stronghold would have been much more likely to go bankrupt than USBTC. I think the difference was that USBTC was being combined with HUT as a merger of equals, when, in my opinion, it was not equal. It was a far weaker compatriot than in this scenario, where it is stronger company acquiring weaker company that is in dire straits. There it was company in dire straits combines with fundamentally sound company, and then supplants the leadership, and now is the new leadership of HUT-8, which to me all across the board was kind of just a mess. Whereas this scenario, like I have no expectation for Stronghold's leadership to be rolling in and taking over the CEO seat from, you know, Ben Gagnon or anything like that.
Right. Yeah. No, I totally get that. Well, maybe another factor though is that I think the USBTC and HUD-8 deal was announced when it was like the height of crypto winter, whereas this deal is like, you know, at the start of a new bull cycle. Hopefully, like we don't know anything for sure, but you know, by all metrics, I think you can say that right now we're sitting kind of on like a plateau before the next segment of the bull run. And I think that that's kind of maybe what's a little bit more exciting about this deal is that this is the time that you want to be expanding, if there was ever a time that you want to be expanding, right? Versus it's a little bit risky to do it in the height of crypto winter because like there's no guarantee that you'll last like long enough to like survive till the next bull market, right? Versus this one, if the bull market is to come just right around the corner, then I think that it's going to be a good time. So yeah, I think that my thoughts around this, it's mostly positive actually. Like again, like I do think that Bitfarms overpaid for this slightly. I don't know if I would have done this deal if I was the CEO, but then again, maybe like, you know, Ben Gagnon obviously knows more about the mining space than me. So maybe he sees something that the rest of us laymen don't see. I.e., like some people were saying, this could be like a HPC opportunity, right? High performance computing, like the AI kind of thing. So what I noticed on this slide, if you guys go back to the Stronghold slide, they have over 750 acres of owned land. If you combine the Scrubgrass and Panther Creek facilities together. So yeah, like one big part of like the, you know, expanding capacity is not just about getting the power, and it's not just about getting the machines. It's about getting land, right? And if you want to do HPC, you definitely want land, because like, for HPC, if you guys don't know, like typically like they don't use the Bitcoin mining ASICs, right? They use like normally what they would do is they build a facility and you just offer the rack space, and then you would subcontract the rack space out to companies who put their own GPUs inside. So you don't actually like own the GPUs. You could like buy GPUs yourself, and just sell the compute if you want, but you don't have to. And a lot of these miners don't. They just build a facility, provide the power, and whoever they sign the contract with, whoever they partner with, they would supply the GPUs, and then they would just like pay the Bitcoin miner for the rack space and the facility itself. So yeah, for that you need a lot of land, and maybe this is kind of Bitfarms' foray into the HPC space, right? A lot of people were speculating on this, and I would know because I went to Bitcoin Nashville and I actually attended a Bitcoin mining panel when I was at Nashville, and all the Bitcoin miners, like I think it was the Hive CEO that was there, and I forget who the other people were, but like it's all like veterans in the Bitcoin mining space, and they were saying how the main talk of the town is actually HPC, because the margins on HPC is so much better than Bitcoin mining. Now, obviously, you can argue that maybe AI is a bubble, maybe this will change in the future, but at least that's the case for now. And I think that if the margins are so much better, if it's so much more profitable, then maybe like it is worth looking into. Who knows, right? And again, I'm like still semi skeptical on the AI revolution thing. I still think that it's better to have a pure play Bitcoin miner, but I'm not against Bitfarms looking into these opportunities if they really do see an opportunity there, right? So yeah, I overall I do like this deal. But I think that they might have overpaid slightly, considering that I think they like the stock of Stronghold went up by like 80% the day that the deal was announced, right? So like the price that Bitfarms paid was 80% above what the current market value was for Stronghold. And an analogy for this is, I guess, since we're in the business of analogies tonight, I'll make one of my own, which is imagine that you're going into like an esports competition and you need a new computer. Well, you could probably build your own computer for a lot cheaper, and have the best bang for your buck. But then it takes you more time because you have to like go out and get all the parts, and then you have to assemble it yourself. Versus walking into your local Best Buy and getting like, I don't know, the Alienware pre-built, right? Where it's going to look nicer, it's going to be flashier, it's going to be turnkey, right? Like you just power it on and it's ready. But you're not getting the best bang for your buck. Yeah, so that's my analogy. I don't know if you all would agree with that. But let me pass it to Dom, and what are your thoughts on this whole deal?
It seems pretty good. I think it's like a W and W for both sides. It seems, I think Tristan was mentioning like depth issues, and then if it sounds like Bitfarms has the capital to be able to cover that, and Bitfarms in the end gets a lot more resources because of it. So it seems like both sides do pretty well. I suppose it's unfortunate that Bitfarms seems like they like paid like too much for this other company here, but I guess it is what it is, and what can you do about it? I'm sure they're gonna benefit from it in the end, so I think all is good. So sounds good.
Yeah, I mean, back to my analogy, it's kind of like, yes, they did pay maybe slightly too much, but it's like if you need a computer to like be the best at like an esports competition, then maybe it's like worth it to spend a little bit more money to save yourself some time, right? Because like I said with the analogy, it's like if you buy a pre-built, then you're not getting the best value for your money, but it's plug and play, and you can like stop worrying about your computer and then perform at your best immediately. Versus with you doing everything yourself, yes, you're saving money, but you're also spending more time. I don't know, Tristan, you're also a computer expert. What do you think of my Alienware versus self-built computer analogy?
I think it works pretty well. A pre-built, obviously there's less hoops to jump through. Whereas a custom computer, there's going to be a lot more quirks to deal with. And, that being said, I think sometimes pre-builts are cheaper than custom computers. You just may be getting, worse quality hardware. So, for example, like they might skimp on one thing while not skimping on something else, or maybe you get something where you can't upgrade it as well, or it's some proprietary bullshit that basically makes it very difficult to upgrade. So yeah, I mean, it works pretty well. It's just if we get into the nitty gritty, I mean, maybe the nitty gritty does work for this scenario, because I'm sure there's going to be quirks and stuff to deal with during this acquisition of Stronghold that Bitfarms will have to negotiate. I think what it really comes down to, though, is that they are getting a lot of land and a lot of power, and likely they get a lot of permits and stuff to that effect, where they can speed up the process of a development of a site if they have the money, right? Which Stronghold obviously didn't have, but Bitfarms has more of. So I think on that front, and then with regards to like HPC, if they can roll up HPC relatively quickly, like faster than building out like Bitcoin miners, etc. Like I'm not opposed to them having an HPC arm that's part of their business that they can quickly put in, and then if at a later date they want to swap some of that out for Bitcoin mining hardware or whatever, that's also fine. But again, I think it's sometimes speed is more beneficial if they can build out an HPC grid in one of the Stronghold locations or something to that effect, with moderate free speed, then maybe that would make up for any delays with like Bitcoin mining, and provide some of that capital that they need to fund additional Bitcoin mining obtaining. So having the HPC would give them a revenue stream that's not tied directly to Bitcoin's price, which does does help the company be a little bit less volatile and help them weather crypto winters that they otherwise may have fallen into real issues with regards to debt, etc. So if the HPC can cover their fixed costs by and large, then during a crypto winter, maybe they won't take on all the debt that they did last time and be in a bad scenario. So I think it's not something we should rule out.
Totally agree. Sounds good. We do have to move on though to our next story for the sake of time. So if you guys don't have anything else to add, let's move on to part 2. So as you guys know, recently I was laid off from my job, and I had some time to think after getting laid off. This happened like, I don't know, 3 weeks ago for our audience members who are watching who didn't know. But yeah, so throughout the past 3 weeks, I've been doing some thinking, and I have this. I had this plan of retiring early, like financial independence, retire early. It's kind of like the theme that I've been trying to go into for the past, like, I don't know, 4 or 5 years now. Yeah, basically my goal was to retire by age 35. And I'm 28 right now. So I started this goal when I was like, 24, 25. So I was like, I'm going to give myself 10 years and then I'm going to retire early. Now that I've gotten laid off, I think what most people will do is they'll be like, oh, I can't retire early now because I have like no income, and like, I'm going to have to delay my early retirement goal. But I'm going to kind of throw a curveball at all of you and say that I'm actually going to up my goal. So like when life throws you a curveball, you throw a curveball back. So I'm going to up my goal to retire by 30. And like I said, I'm 28 now, so that only gives me 2 more years to actually achieve this retirement goal, which sounds insane, right? Because it's like I only started working when I was 24. So if I could like retire by 30, that would mean that I've worked for 6 years and then I could just tap out. So it's like it sounds crazy, it sounds insane, and it's like, how are you going to achieve that? You're totally nuts. Yeah, I've obviously gotten a lot of those comments. So I decided to write this article, which I posted on X and also LinkedIn for those of you who don't have X. So you could go and read that article. I'm going to post the links down below in the description. I'm going to post the links and then you guys can go read it for yourself if you want. But you don't have to, though, because we're going to go through it today. And I'm going to like just kind of briefly skim read this article really fast. I know it's a long article, but just give me like 5 to 10 minutes, 10 minutes at most. I promise I will speed read this. And then if you guys get lost, feel free to like pause the video and stuff like that. But I'm going to be reading pretty fast. So basically, I wrote this article on how I'm actually going to achieve the goal of retirement for the next 2 years. So here we go. So my retire by 30 plan, and I'm 28 now, as I said. So recently I tossed into the world this idea that if my investment portfolio performs how I think it's going to perform in the next 1 to 2 years, there's a more than likely scenario that I can achieve the goal of financial independence, retire early before my 30th birthday. I'm 28 right now. And this declaration drew in a bit more attention than I was expecting. And many people asked me exactly why, what I'm invested in and why I'm so confident that it's going to work. So I thought I'd put this new X Premium feature to work and write a proper X article on my exact thesis on investing. And obviously, as a disclaimer, before we begin, this is not financial advice. Please don't just do something because I'm doing it. Do your own research and make your own financial decisions. All right, so how this is going to work is that I'm going to break down my investments into categories and say roughly how much each category takes up in percentage terms in my portfolio, and then provide a rough target as to how much profit I'm aiming for. So from the biggest to the smallest, number one is Bitcoin mining stocks, and this is around 50% of my entire portfolio. So the big question is, why buy Bitcoin mining stocks instead of actual Bitcoin? And that's probably the first question that everyone has. And my answer is simple. I believe that Bitcoin mining stocks will do a 2 to 3x on top of Bitcoin itself. Why is that the case? Well, Bitcoin mining companies are the only companies that can acquire Bitcoin at the marginal cost of electricity. So for instance, if it costs 40,000 USD to mine one Bitcoin and Bitcoin is 60,000 USD, then Bitcoin miners effectively purchase the Bitcoin at 40,000 USD each and then can immediately sell it for a 20K profit. And now Bitcoin miners are the only ones capable of doing this. If an average Joe like you or I try to acquire a whole Bitcoin, we'd have to go to the open market and pay 60,000, assuming that that's the price right now. But Bitcoin miners can purchase the electricity, which in turn purchases the Bitcoin. And through this method, they can get Bitcoin at the cost of electricity. Now, this effect does get magnified if Bitcoin price increases. Because Bitcoin mining companies often sign contracts with the with the power companies themselves, the cost of the electricity is relatively fixed. For instance, a power plant agrees to sell electricity for 4 cents a kilowatt hour for a set period of time. Of course, as competition in mining increases, the Bitcoin mining company will need to use more electricity to mine Bitcoin. So the cost of electricity isn't completely fixed. It will still go up by a little bit. However, the cost of electricity to mine Bitcoin goes up less than the price of Bitcoin itself. So for instance, if Bitcoin increases from 60,000 to 100,000, the cost to mine one BTC might go from 40,000 to 50,000. This essentially creates a leverage play on Bitcoin that is unique to Bitcoin mining companies. Based on previous models and inferences of how Bitcoin may perform based on historical evidence, I have reason to believe that Bitcoin will top out to close the end of 2025 at around 150K to 200K, or maybe even more. But I'm just being conservative. So if we take the midpoint of that range, which is around 175K, that's about a 3x from the current price of Bitcoin as of me writing this article on in August of 2024. So assuming this, if we say that Bitcoin mining companies are another 2x on top of that, and I'm taking the conservative end, it could be as high as 3x, then we could see the average Bitcoin mining company do a 6x from now till the end of 2025. So that's part one. Part two is Bitcoin itself. So yeah, this part I've already explained ad nauseum, so I'm not going to spend too much time on it. As you guys know, I'm known as Bitcoin Moses, right? So that's all I'm going to say. So I'm not going to explain the whole Bitcoin bullish thesis here because I don't want to be here for 3 hours. So yeah, you guys are just going to have to kind of trust me on this one. So anyways, I wrote a book on this, by the way, link down below in the description for that as well. If you're interested in hyper Bitcoinization, a story about a revolution. So that's part two. Part three, Tesla stock. So I will try to explain, kind of skim this part about Tesla. I've talked about Tesla a lot on this show, but the article goes into much more detail. But basically, there's a few categories, right? So full self-driving. So first of all, I believe that Tesla is on the verge of cracking level 5 full self-driving. So I know people have been saying this for years and years now. If you don't believe it, you don't believe it. If you believe it, then you do. So it's up to you, right? But just think about the implications of what happens if Tesla cracks FSD. Like, even if you don't believe it, if they can do it, then just pretend that they could do it. Then if they can do it, then companies like Uber and Lyft, like, what are they going to do, right? They're just going to disappear, basically. Because in case you guys don't know, the biggest part of Uber and Lyft's expense is, of course, paying the driver, right? That's why it's so hard for them to be profitable. But if you remove the driver, if the car can drive itself, it's going to be so much more profitable. And if Tesla owns that technology and Uber and Lyft does not, then who do you think is going to win in the taxi business, right? So that's part one of the Tesla thesis. Part two, so Tesla is completely dominant, right? So you can see that this is a chart of the 25 best-selling models of cars for the full year of 2023. And this includes gas cars, right? Internal combustion cars as well. So the Tesla Model Y was the best-selling car globally in 2023 out of everything, not just out of EVs, but out of everything, right? RAV4 came in second. So that's all I have to say to that. And Cybertruck is coming, right? Like, people call it ugly, but pre-orders are through the roof, and they can't make enough of these. And EV adoption is inevitable. So there's a chart of the predicted trends of the percentage of internal combustion versus EVs, and regardless of which kind of trend you go with, whether it's the fast or slow one, it's going to happen, right? So, like, eventually, by a certain time, it's going to cross over, whether it's 2027 or 2028, sometime around there. There's going to be more EVs on the road than internal combustion. So this is just a reality, right? You can be a petrol head and you can say that I'll never convert to an EV, but you don't get to decide, the market does. So that's that. Tesla Robotics. This is just a cherry on top. I know it's not profitable yet, but just look at the progress that they've made on building robots, right? So Tesla is often thought of as a car company, but in my opinion, that's completely wrong. Tesla is a general purpose AI company that also has hardware. So within 2 years of announcing their robotics division, their prototype can already, the fingers of the robot is already precise enough to pick up an egg and a raw egg and not break it. It can pick up the egg, put it in another container, stuff like that. So this is only 2 years of progress. Imagine what's going to happen in another 2 to 3 years. And yeah, Elon Musk So I know he's a controversial figure, but I'm not here to talk about Elon's politics or his opinions on politics. I'm just asking you to evaluate his leadership ability, right? So regardless, even if you think he's a horrible person, just evaluate him on his ability to lead a company and lead a team. And I think that if you were being honest with yourself, there's very few people on earth that is as effective of a leader, of a business leader, than Elon Musk. So this is just a fact, right? So yeah, I think that given all I've just said, my target for Tesla is a 2x by the end of 2025. So that would put it around $450 per share at today's price range, right? Because I know they've split a couple of times in terms of the stock, right? But yeah, split adjusted to today's price, $450 per share is my target. And I think that it could go much higher than that, but it's just like, it's a long-term play, right? So I'm like not just gonna like sell out of all of my Tesla by the end of 2025. Although I will sell a lot of Bitcoin miners, but I'm not gonna sell out of Tesla. So that's number 3. Number 4, Solana. It's only 5% of my portfolio, but I think that's, you know, my thesis on Solana is quite simple, right? It's just a better Ethereum. So if you guys don't believe me, try sending a transaction on Ethereum and then try sending a transaction on Solana and look at the speed and the fees that you paid, right? So just try that and then see which one is better. So I think that universally, if like people are being honest, you will say that Solana is better. So if Solana is a better kind of, you know, this multi-purpose smart contract platform, then and it's like a much like less valued than Ethereum right now in terms of market cap, then I think that Solana will continue to grow and eat up Ethereum's market cap. So yeah, I mean, it's hard to say with crypto, but I think that Solana has a chance of hitting 1,000 USD this cycle, which sounds ridiculous, but remember it topped out at like what 240 250 USD last cycle, so that's only a 4x from the all-time high, which I don't think is a ridiculous price target for crypto at all, right? Like crypto can easily do 4x if it's the right, you know, project and stuff like that. Meme coins have done like 10x or more easily. But yeah, I mean Solana itself, I wouldn't say it's a meme coin. It's people actually use it, right? So but yeah, 1,000 is possible, but I'm just gonna say 500 just to be conservative, which is still around a 4x from where the price is now. So that is Solana. And yeah, number 5 is PayPal. PayPal is only 2.5%. Although I've talked about PayPal a lot on this show, I think, but it's a small percentage of my portfolio just because I think there's like much more interesting things right now. But I think that PayPal is at like a very attractive valuation, enough for me to you know, be able to be willing to invest in it, is what I'm trying to say. So there's that PayPal, and I know I've gone through like a lot of the reasoning around PayPal. You know, you can look at PEG ratios, you can look at market cap, you can look at forward PEs and stuff like that. But I'm not going to get into the nitty gritty. I think I've beat that horse to death already on this show a lot of previous times. So I'll skip that part. And then the last part is number 6, Solana altcoins. So if you guys follow my last thesis on why Solana is better than Ethereum, then this thesis is kind of based upon that, where I think that if Solana is better than Ethereum, then a lot of the coins that are based on Solana that does similar things to coins that are based on Ethereum, then the Solana based coins should theoretically like do better as well, right? So this is just my thesis, and I'll name 2 examples, right? So example number 1, Chainlink, which is Ethereum based, did really well last cycle, but Pith Network, is the closest equivalent to Chainlink, but on Solana. So Uniswap is Ethereum based, did well last cycle, and it's doing pretty well this cycle too, actually. But Jupiter is the closest equivalent to Uniswap, but it's on Solana. So I know this is kind of hand wavy, but this is just kind of like my quick and dirty on my bullish thesis. So yeah, that's basically my article. Again, I kind of skimmed through a lot of that because we don't have enough time to just read it word for word. But you guys can check out this article if you guys are interested. It's on my X profile, and I put it on my LinkedIn as well. But right now, I want to toss the question back to you guys. So, given I'm not sure if you guys read the full article or it just heard my summary right now, but regardless, what do you guys think of my plan? Do you guys think it's going to work, or do you guys think I'm going to be able to retire by 30? Like, what's your what's kind of like your first impression of everything I just mentioned?
So like I'll chime in first. So first and foremost, I thought it was pretty interesting how you were explaining like the whole electricity breakdown in Bitcoin mining stocks and how like more advantageous these mining companies have it versus like us retail investors. I think that honestly makes me want to buy more um, Bitcoin mining stocks. Can't believe I'm saying that, but I think you've convinced me a bit more. And I don't know if that's a good thing or bad thing. It's probably a good thing, and I do respect that you like have like 50% of your portfolio in that, and I do agree with what you have to say, and that's really interesting. Bitcoin's pretty self-explanatory. Like, you are Bitcoin Moses after all, so you know the bull that you are. Tesla, I am also in Tesla too as well, so I'm gonna keep a hold of that. If they can get the autonomous driving down, like really, really well, like fully like self-driving, then that'll be good for us. Then the stock rises, and I do agree, and I'm also gonna hold on to it as well. Um, so yes, Elon Musk is controversial, but I think he has a good way of making things work out. So for that, I'm still gonna hold on to the stock. I'm sure he'll be able to figure things out. Solana, this makes me actually want to buy more Solana too as well, since you have 5% of it in your portfolio. I've been recently buying into it, and after hearing this, it makes me want to sell a bit of Ethereum and buy more Solana. Like I already knew this information, but just hearing it one more time is quite funny. It's working. I kind of want to buy more Solana, and PayPal. I do have it too as well. Like the value is crazy. Some people use what's the equivalent to Cash App? Venmo. So still can't believe it's been actually going up a bit, but yeah, no, I'm still in it, and I'm still going to hold on. Soul Alts I haven't looked into yet, but I will soon. So overall, I think your plan's pretty realistic, and I could see a lot of these investments doing well. So the future will tell. And if these rate cuts are like beginning to happen, then all these things are pretty realistic. So I'll say that. And I have some reevaluating in my portfolio to do.
Yeah, no, don't sue me if I'm wrong. But on that PayPal note, actually, I did have something that I wanted to add. So recently, I've started to use PayPal on like online platforms, like wherever it's accepted to pay, and I think that it's actually pretty great. So I'm not sure if you guys know, like you don't have to like load up your PayPal account with money to spend it. You can use PayPal as an intermediary to direct your like Visa card or like Amex or MasterCard, whatever, take your credit card payment through it. So what happens is that like when you check out, like there will be an option called Pay with PayPal, and then you click on that, and then you sign in with your PayPal account, and then if you've added your credit card to your PayPal account, then you can like select your whatever credit card you were going to pay with anyways, and then PayPal will charge you, and then PayPal will pay whoever it is the third party is. And like it's like, and you're asking like, why would I want to do that? It just sounds like an extra step. Well, the reason why you might want to do that is because it PayPal sits as like an intermediary, so it's like an extra guarantee. So it's like good for companies that you're paying that you don't really know or you don't really trust. So if you don't trust that company, you might not want to like type in your credit card directly like into their website or whatever, right? So and then if they're like, you know, let's say if it's a scam or if it's like a fraud or whatever, then they could like you could ask. It's a lot easier to ask PayPal for your money back than asking your credit card company, probably, right? So it just has like an extra layer of security for your payments when you route it through PayPal. So I think it's really nice that that is an option sometimes. So I'm not sure if you guys ever heard of like privacy.com. It's not available here in Canada, but it's kind of like along the same ideas where it's like you can generate like virtual credit cards and pay with those. So like, you know, the third party never actually gets your actual credit card information. They get like a one-time use credit card that is like generated by the website that like they can't charge you again if they try to like swipe that credit card again. So it's just nice that like PayPal trying to go into that space as well. And I know they've had this feature for a long time now, but I'm just saying like this is something that I've recently gotten into. Like before I didn't used to like care as much, but ever since I became a PayPal shareholder, I'm like I'm doing my part, you know. Uh but yeah, anyways, um let me pass it to Tristan. So Tristan, what did you think about like my retire by 30 plan, and do you think it's going to work, or what are your thoughts on any of the investments that I mentioned in general?
Yeah, so I think you definitely have a aggressive portfolio. I think that it is definitely not for the faint of heart. I'll say that because as we all know, all are well aware, Bitcoin mining stocks, Bitcoin itself, very volatile. And therefore, you know, you have to watch as you gain lots of money and lose lots of money on some days. So it's very much not for the faint of heart. I think from that perspective, though, I think from a risk to reward, I think I tend to be aligned with that portion of your portfolio pretty well. I think that, you know, again, not financial advice, but Bitcoin and Bitcoin mining companies are a pretty strong investment to be holding going into the Bitcoin bull run that we are expecting to happen. You know, we'll see how it plays out this time around, but I think even if it is a very pathetic Bitcoin bull run, I think you're still looking at some seriously impressive gains. And then when we move into some of your other picks, I always find it interesting how bullish you are on Tesla, because to me, Tesla is, you know, a potentially a really good buy, but it's also not something that I would make as such a large portion of my portfolio. They've already had a major run up from their measly beginnings to their present value. And I think at the 600 billion that they're currently worth, I think that, you know, you may be looking at some reasonable gains, but I don't know. I don't know if I would bet on them as heavily in the short term, you know. And maybe that's just my bias as being more Bitcoin bull. It's, to me, I'm kind of like, why would you own Tesla when you could own something else, aka another Bitcoin mining stock? But I think it's really like Tesla has a good amount of value, and I just find that the product line is currently pretty eh to me. It's not yet to the point where I think that it's an incredible product line. And while they are moving into a lot of these different areas, I think full self-driving is still multiple years away. I don't care what Elon says. I don't care what anyone says. from what I've seen, everything that I've seen documented on this, it is still very early stages. It is not as good as a human driver. And in order for it to get widespread adoption, it needs to be better than the average driver. And I just don't see that happening anytime soon. So whether or not they can sell a lot of EVs, I don't think that they're going to be going into the $1 trillion valuation on the back of EVs. I think that that will be something where AI or their software or something to that effect is what really draws them into that realm. Because again, if we're looking at them as just a car company, they're extremely overvalued as a car company. That's not to say that they are overvalued, because they're not just a car company, but it is to say that if you're expecting their EV sales to generate them sufficient revenue and sufficient profit that they can move into that $1 trillion window, I just don't see that. I just don't see that happening. And then even if they do move into the $1 trillion window, you're looking at what, an 80% gain? That's pretty good. It's not a Bitcoin money. But yeah.
No, I totally get what you're saying. And as I said in my article, Tesla's really like, I invested in Tesla as like a 5-year plus kind of long-term thing. So I do sort of even agree with you that in the short term, I do expect Bitcoin miners and Bitcoin itself even to do better than Tesla. So like, if I was really trying to like be like ultra aggressive, I know you guys like think I'm already aggressive enough. But as I always say, I think my biggest problem in investing is that I'm not aggressive enough, that I should be even more aggressive. I know like Dom's laughing because he like totally is shocked by what I just said. But like, if I were to be more aggressive, then I would do what Tristan just suggested, which is sell all my Tesla and buy another Bitcoin miner. And maybe that's like still on the table. Like I'm like half tempted to actually do that, perhaps. But yeah, I mean, in terms of why I'm invested in Tesla, I do have to say I disagree with a lot of what you said about Tesla, Tristan. I do think that FSD is fairly close, and the biggest barrier is actually the regulations, in my opinion, where like the it's hard to convince lawmakers to actually let like the car be allowed to drive itself, right? Like, and especially if you're gonna have somebody who's like, an underage kid maybe like in the car who doesn't have a license, like it's gonna take a lot to convince lawmakers to let that happen. But I think that will also come with time. First of all, like let's not worry about that yet because we're still trying to get the technology down, right? So in I believe like October, so they were actually supposed to have Robo Taxi Day earlier this month, but then they delayed it. But they pushed it back to October, I think. So in October, Elon is scheduled to demonstrate the Robo Taxi, right? So it could be both hardware and software, where it's like a prototype of a robo taxi that is going to be, um, somewhat ready. Like I don't know exactly to what extent, but that's kind of uh, what the plan is right now, right? So unfortunately, like it was delayed. Otherwise, we would have had it already. But we'll see in October if it actually pans out. But I do have a lot of high expectations for that for them to at least show something that's very impressive. Like it still might not be 100% of the way there, but I do expect something great to come out of the Tesla team in October. So that's FSD, and again, we'll just have to wait and see. And I'm not gonna like talk about Tesla for like forever because like I can talk about this forever. But my point is that yeah, I think that Tesla, like nobody saw Nvidia run from like less than $1 trillion to like, world's second or first largest company in a matter of like a year or two, right? So like, and Nvidia was a big company like before their run too. So if you're saying that Tesla's worth 600 billion, can it really run to 2 trillion, 3 trillion? It could happen very fast if the factors and the conditions are right. So it's, again, Tesla is not just a car company. It's a robotics company. It's an AI company. It's just a general artificial intelligence company. So I think that the robotics thing has, but the potential to be super great as well. But yeah, again, we'll have to see, because I don't want to waste all our time, and we do have to move on to the next story. In case, unless you guys wanted to add something. If not, let's move on. So, the last story of tonight is I know I said we'll stop talking about politics for a week and take a break, but that was actually a lie. So we're talking about politics again. But you guys will love this. Don't worry. So I rolled a bunch of politics stories together, and I think that it's a pretty open kind of field where you guys can kind of pick and choose which one you want to respond to. But let's jump in. So the first kind of story is Kamala Harris's Polymarket odds. So Polymarket, in case you guys don't know what that is, it's a betting market, right? You can bet with crypto, you can bet with stable coins and stuff on Polymarket. It's basically like, if you think something is going to happen, it's like all of the people who are actually putting the money where their mouth is, right? So if you think Kamala is going to win, it's people who are actually willing to bet real money on that happening, or vice versa for Trump, right? So Polymarket, as people are saying, is a more accurate measure than the polls, because the polls, it's it doesn't cost you anything to say who you're going to vote for, and you can easily change. But if you bet $100 on somebody winning, you're probably not going to change your mind, because why would you vote against your $100, right? So Polymarket was showing Kamala Harris leading Trump by as much as 10%, just as early as last week. So I think it was 55 Kamala Harris, 45% Trump. But since last week, we've got the news that Kamala has announced a bunch of controversial economic proposals, which we'll get into. And because of that, her Polymarket odds have dropped, and now Trump is ahead again. So the latest is, when I took the screenshot, it was 52 to 47, 52 in favor of Trump. But now I think it's even higher. It's 53% Trump and 46% Harris. So Trump went up another percent and Harris dropped another percent. So it's a 6 to 7 point lead with Trump now on Polymarket. So he went from being down 10% to being up 6 to 7%. So a dramatic swing for sure. So what are these policies, or what are these what are the causes of why Kamala has dropped so much? She proposed a bunch of policies that were not received well. So what are some of these policies? Well, number one is tackling price gouging. So she's blaming the corporations for inflation, basically, and she's saying that we're gonna clamp down on these corporations that are raising their prices to gouge consumers. Basically, it's a fancier way of saying price controls. It's basically price controls. How else are you going to tackle so-called corporate greed and stuff? You just make inflation illegal, basically, right? You control the prices. Bread should never be more than $3 a loaf, and I'm gonna put a price cap on it, and you can never charge more than $3 a loaf for bread. So price controls is number one. She's proposing raising the corporate tax rate from 21%, where it is now, to 28%. And she's proposing on raising the capital gains tax rate to 44.6%, which is the highest in decades, if I recall correctly, if it were to happen. And she's proposing a 25% tax on unrealized gains for people who have $100 million or more of assets. So this is being sold as you don't have to worry about this if you have less than $100 million of assets, which is 99.99% of people, right? So it's only going to be like the 0.001% of the top richest people that's going to be affected. But we'll talk about why that might be problematic as well, even if it only directly affects super ultra rich people. But basically, that's kind of this first part of this story as to, like, explain why Kamala Harris has dropped so much in Polymarket. Or perhaps you guys would have a different opinion on a different reason why, but the fact that she's dropped, her odds have dropped, is undisputed fact. Now, the second part of this story is RFK, right? Robert F. Kennedy Jr., who, if you guys recall, he's the nephew of JFK, the one who was assassinated, and he's running for president. He was running for president under the Democratic ticket, but the Democrats tried like all their tricks in the book to block him because they think like they didn't want him to go against Joe Biden and now Kamala Harris, right? And he got frustrated basically because he's getting railroaded by the Democratic Party. So he dropped out of the Democratic nomination process and continued to run for president as an independent. Now, recently, his polling numbers have been dropping as well. So he was polling at over 10% at one point, but now he's dropped to like around 5% national support. So he's getting to the point where it's like he's just burning money and wasting money, and he's running out of money by continuing to stay in the race. So the rumor is that we're recording this on Thursday night, but the rumor is that on Friday, which is tomorrow, he's going to announce at an event in Phoenix, Arizona, which is near where Trump is holding a similar event. But RFK is going to announce at his event in Arizona that he's dropping out of the race. And the second part of the rumor is that not only is he dropping out, he's going to endorse Donald Trump. Now, this came maybe as a shock to some people who are not. It didn't come as a shock to me, but it came as a shock to some people who might not have been paying attention to U.S. politics because, RFK, like the Kennedys are like one of the most famous families in the Democratic Party, right? They're like almost like the royal family of the United States and like veterans of the Democratic Party. So for RFK to drop out and endorse the Republican candidate, it just goes to show how much of a falling out and how much of like a dispute there is between RFK and the Democratic Party as a whole. But that is the rumor. It's not like it's like confirmed by like ABC News and like a bunch of other news, but it's not like fully confirmed because we didn't hear the speech yet. The speech is tomorrow. But I think it's pretty clear that it's going to happen. And in fact, Polymarket predicts, well, by the time I took the screenshot, it was 85%. I bet it's even higher now that RFK will drop out of the race. So those are the two parts of the politics news that I wanted to kind of cover. So my question to you guys is, on the first part, what do you think of Kamala's policies, like, price controls, raising the corporate tax, raising capital gains tax, and specifically like touch upon, taxing unrealized gains? Do you think that that's a great idea or that's a bad idea? Like, what are your thoughts on that? And then the second part, what are your thoughts on the whole like RFK situation? Do you think that this is gonna like make a difference? Do you think that it's gonna like help Trump? And what are your thoughts on like him as a candidate, his and his campaign as a whole? So, bit of an open field, a lot of questions. Start wherever you want.
Sure. Okay. I'll give it a go. I think the biggest thing for me is that 25% tax on unrealized gains. It's the fact that it's not even gains that you've, sold or like provided yourself into cash. I think that's the most surprising. I know it's like for like the 1% of the US population, but I still think that's pretty insane and unfair to those like 1% individuals. And I think it's just gonna leave money, that used to be in the States is gonna find its way somewhere else into another area, because if you tax these ridiculous taxes on these rich people that are like, providing a lot of income and money to like the American economy and society, that money might go away and it might go somewhere else. And that in the end actually might not be good, like for the future of the American economy. So I don't like really agree with that. Um, and in terms of like the polling, I think it's interesting how it's pretty close. And the whole thing with RFK potentially dropping out is pretty interesting too as well. I don't know how much impact he'll have if he like endorses Trump, because I think, for example, California and New York will still be stuck in their like blue ways. Like I don't know if that alone can, sway their decision any differently. I know a lot of the other states are pretty red, like the upper north, like Dakotas, whatever, they're always gonna be red. But maybe perhaps I'd see like California, like Chicago and like New York needing a little more than just like a person like endorsing Trump for it to change a bit. But I mean, who knows? I could be wrong. So maybe things might change. But yeah, that's all I have to say.
I think Tristan might be frozen, so we'll give him a sec to fix that. In the meantime, I guess I'll go next, just to mix up the order a bit. So yeah, the unrealized gains tax part. I think that is a horrible idea, and it's like one of the worst economic ideas I've ever heard in my life. And the reason is that, well, okay, first of all, there's no way to determine like a fair price of what your unrealized gain actually is. And what I mean by that is that, let's say if I like, if I, buy a house, right? And then I paid like $1 million for a house. But then like, who's to say how much this house is actually worth until like I'm able to sell the house, right? Like, what if like a government appraiser and like, it- somebody who's tasked with determining how much the house is so that they can tax you, they would always have an incentive to like say that it's worth higher than it actually is, right? So if I buy a house for $1 million and then somebody comes in from the IRS or from the government, and they say, I think your house is worth $10 million, and it doesn't matter that the house down the street from you sold for 2 million. I think your house is worth 10 million because like your house looks nicer than the one that's down the street. Then do I owe taxes on the basis that it's worth $10 million, even though I haven't sold anything, right? Like, and I don't have the cash, right? Because like unrealized gains are ethereal, like they don't exist, and they only get like they only come into existence when you sell it, right? When you make the transaction. So if the government person says your house is actually worth $10 million, so I was like, oh crap, then like I can't disprove them, right? Or I guess I can disprove them by actually selling my house. But what if I like don't want to sell my house because like I know that like the government person says it's worth 10 million, but maybe like if I actually try to sell it on the market is worth like $900,000, I'd actually lose 100K if I sold the house. But like in order to prove the like our IRS agent wrong, I'd have to like actually sell my house, right? So like this idea just doesn't make sense because like who's to say how much your unrealized gain actually is? And I know another like argument that I've seen online is that people are saying, "Oh, it's only gonna. Why do you care, right? Like, do you have $100 million? Like, all the people that are complaining are people who don't have $100 million, and this is only going to affect the ultra rich." Let me give you kind of a background on a situation that happened in 1913 in America. So this is when they introduced the income tax for the first time. By the way, did you know that there was no income tax in America for like, the first like 100 or so years of its existence, right? So like that wasn't a thing like back in the day when the founding fathers like established the country. But they introduced the income tax, and back then it was $20,000, like you'd have to pay taxes, you have to pay income tax at 1% marginal rate starting at $20,000. Now, $20,000 back then is worth in 2015 dollars $480,000. So, you know, it's, you can argue it's still on the high end, like not like a lot of households make $480,000 per year, but like this is what I'm saying, right? Like it seems like, you know, it's a thing that only affects the ultra wealthy, but like if they kept the 1% like marginal tax rate at $20,000, eventually inflation would have caught up. And like they don't have to like change the brackets. You would like grow into the brackets because of inflation. Like you get what I mean, right? So like they're saying that this is only going to affect the 100 million centime millionaires, but then like either the dollar gets inflated so much that like everyone becomes a centime millionaire because like the US dollar got printed to oblivion, or they just like they lower the requirements, like they lower the threshold slowly over time, right? So, you know, this year it's only going to be 100 if you have $100 million. Next year is going to be, you know, you only have like you'd qualify, you'd have to pay for the tax if you have $90 million, or like they will find ways to lower it later, right? So we don't want to open that Pandora's box of unrealized gains, is what I'm saying. Otherwise, like you just have to pay taxes because the government said you made a gain, and like it's just there's no way you can disprove them, right? It's just like a one-sided thing where I think you made a gain, and you can't disprove me, so therefore you owe taxes. So I think that like this is why it's such a bad idea, and it opens up a box that you can't close. And I don't want to make this overly political, but you know, the fact that the government can say something and then seize your assets, where do we see that elsewhere in the world, right? We see these in authoritarian countries where the government can just arbitrarily seize your assets. And again, like, don't want to sound like a conspiracy theorist, but this is often a feature of hard left socialist regimes. So just putting that out there. But you guys can disagree with that if you want, but this is just my opinion. So that's number one. And number two, with RFK dropping out, I think that this is kind of like inevitable. So it's been a long time coming, and I do think that, like, as you guys know, I said like ideologically I align with RFK the most out of like the three major candidates, Trump, Harris, and RFK, right? But yeah, unfortunately, his campaign just didn't pick up any steam, and it just like he just didn't get traction, right? Like, there's multiple reasons we can analyze as to why exactly he didn't pick up traction, but we have to face the music that he didn't. So I think it's the right thing to do for him to drop out because, you know, acting as a spoiler candidate and like getting people to like vote for a third party that's not going to win, it just makes it more likely for like certain outcomes to happen that otherwise would not have happened, right? So for example, like, and then this goes for both sides. Let's say you're a Harris supporter and you really hate Trump. Well then, like, you know, a spoiler candidate can work against Harris at times because, again, he used to be a Democrat, right? But then, like, you can also make the argument that maybe it'll hurt Trump more because, like, you know, a lot of people who are agreeing with RFK, they're like saying that RFK actually aligns more with Trump. So if RFK stays in the race, then a lot of people might vote for RFK instead of Trump, and then that makes a Harris victory more likely, which is, you know, probably not what you want if you're supportive of Trump. And I know this is like a big debate in the Bitcoin space as well, where RFK is seen as the more pro Bitcoin candidate, but because you know, Trump is like leading in the polls and RFK is not getting traction, like, and Trump has said some pro Bitcoin things, although not as much as RFK. The consensus is that Trump is a lot better than Harris in terms of the potential to, you know, support Bitcoin and pass pro Bitcoin legislation. So yeah, I just think that like it's it's gone to the point where, like, this election, I know they say this about every election, but this election is incredibly consequential to the future of America. And I just think that if we fumble the ball at this critical moment, and then elect a certain candidate, which again, I'm not going to name that person out of respect and out of not letting the comment section blow up into a huge firestorm. But I just think that, in my opinion, it's so like consequential that if you elect the wrong person to be the president, then it's going to be a big disaster. So I do support RFK's decision to drop out if that does end up being what he's going to do. So that's just my opinion. Now let me pass it to Tristan for your thoughts.
I do want to hammer on that unrealized gains piece a little bit more, because it's monumentally stupid. Unless you're going to give me a 25% tax rebate on my losses, and then we're just going to arbitrarily take that at different points. And even then, I don't know how the hell you'd calculate that. It just seems like a complete meme and a half to try and figure out, right? Like, for example, if you had a portfolio, even if they say I'm just going to use smaller numbers, but even if they say it's only for 100 million, say you have a portfolio that's worth $100,000. Your portfolio shoots up in value. It's now $150,000. Congratulations, you've done great. Now you have $50,000. If we're now taxing on that unrealized gains, you now owe money on that $50,000, $10,000 to $2,500. But then say your portfolio tanks $70,000. Now you're down to $80,000. Where do I get taxed? Do I get taxed at the time where my portfolio was worth $150,000, but now it's worth $80,000? Like the whole question of how you're going to tax these unrealized gains is like ridiculous, because who decides when your portfolio is actually worth XYZ amount of money, right? And if you actually wanted to cause a real degree of change on that front, maybe you could look at taxing if someone is taking out debt against their investments or something to that effect. But like, by taxing the unrealized gains itself, you're making it, you're going to be basically doing a completely arbitrary assessment of their portfolio at any given time and trying to determine a value from it that is going to be essentially arbitrary. And I think that route is just frankly going to just increase government bureaucracy and just cause a whole mess in order to try and collect this amount of money that is completely nebulous and impossible to pin down. And by the time you've figured out how much someone should owe you, the odds that person has figured out a great way to leave the country without being taxed or move the money to someplace that you cannot tax it from is very high. So at that point, why are you bothering? Because it just feels like it's going to generate such a monumental amount of effort to get an amount of money that frankly is completely arbitrary. So like, how much money are you going to get? I just feel like it's just a complete waste of time. It's like it's all there to signal to the poor or people that this is going to be, this is going to help you, when in reality it's just it can't. It has no basis in fact that this is something that can be used to actually target these individuals who are having all this wealth, and a lot of them in essence aren't doing much with it, right? The strategy for taxing that is not through taxing unrealized gains. It's just what, like, it just makes no sense to me, because also, what time frame are you using? Are we looking at the time frame of this annual year? What if my portfolio was up this year but last year was down? Like, it's just so completely arbitrary. Like, what if I have $100,000 portfolio? Okay, it's gone down every year except for this year. So it's now down from 100,000 to 50,000. And say I make $10,000 this year. Woohoo! Now I'm being taxed on that $10,000. Is that what we're saying? I've lost $40,000. Like, it's like, it just makes no sense to me. Just across the board. I just
Yeah, and a lot of people are saying how, like, I totally agree with everything you just said, by the way, and a lot of people are saying how this idea is like totally un-American, and I would even go a step further. It's just like we're like a group of Canadians right now. It's like it's un-Canadian as well, right? Like it's like, I don't know, like it's anti-liberty, or is anti, like, prosperity, I guess I would say, because it's like you're punishing people for winning, but then you're not giving them a break when they lose, right? So, like, as you said, like, if your portfolio went down and it's a paper loss, they're not going to give you a credit for that. But if your portfolio goes up and you haven't even realized the gains, it's just a paper win, then they're already, like, pressing the tax button and punishing you for that.
Yeah. And I think actually I would say that I would use harsher language than you're saying with regards to the, like, it being anti-liberal or anti-Canadian. I think it's just completely nonsensical. Like, I think it has no logic to it. It is completely unobtainable, or if it is obtainable, it's going to be moronically obtainable. And because of that fact, it's a complete waste of breath for them to have it in their platform, because it is going to provide no value to anyone anywhere. And all it's going to do is convince more people to leave the country who have lots of money, or just move the money elsewhere. So it's completely it's not even anti-libertarian or anything. Well, maybe it is, but, like, that's not even the point that I'm really hammering on. For me, it's just stupid. It's just completely illogical. It has no practical route to it being a valuable investment of all the billions of dollars that it's going to take to build a bureaucracy to try and receive this money.
Yeah, no, I would go even a step further. Is like, not only does it have no value, it has negative value, right? Like, it makes things more difficult, and it just makes everything worse. It's not that it doesn't provide value for the people. It doesn't, but it's worse than that. It makes everything worse. So, like, this is what I'm saying. Like, I've been called, like, being hyperbolic. I've been called, like, being alt-right when I say that this is, like, the one of the most consequential elections that America's had for a long time. I don't know if I would say it's the most consequential election ever, but it's definitely one of the most consequential elections in a long time. And I just don't think people realize that, right? So, like, when Kamala became the presumptive nominee, she rode this wave of, like, good vibes. Like, that's why she was surging in the polls, because, like, face it, like, she's only done scripted interviews and just scripted speeches and stuff like that, and basically that's all it took for her to rise in the polls and overcome Trump in terms of the averages, especially in battleground states, right? And then her first wave of actual policy proposals, we get, like, these dumb ideas. Like, we talked about price controls last week, so that's, like, part of her platform as well. She didn't call it price controls, she calls it cracking down on corporate price gouging, which is, like, again, as I said, a fancier way to say price controls. And the 25% unrealized gains tax on, like, the ultra wealthy. Like, as I said, it doesn't matter that you're, like, only targeting the ultra wealthy. Like, this, like, once you open that box, like, you can't close it again, right? So, yeah, her first wave of economic policies are already like this. So I can't imagine what she's gonna be like if she actually becomes president. And maybe thankfully, like it looks like the Republicans are gonna retain this, are gonna take over the Senate. So maybe like she won't actually get to implement a lot of these policies. But like if she was given her way, right? Like if the Democrats sweep, then there's like a really good chance that a lot of this is actually going to come into reality, and you're going to see the full effect of exactly what happens when you like just raise taxes on like everyone and everything, and spend money like crazy. And like people are calling me like alt-right or hyperbolic, or when I say like this is the most consequential election ever. But it's like, look, these are policies that are actually like in her platform. This, like, for once, it's not just like the crazy like Alex Jones people saying that, oh, like they're putting the the chemicals in the water to make the frogs gay. And it's like it's not that type of stuff anymore, right? Like this is legit, like what the Democrats are proposing, and they're asking for your vote, so that they can make this stuff happen. And I just like, again, I don't want to get too political, because I said that, like, because I've already gotten political enough in the previous few episodes in the past few weeks. But it's just like, how could anyone actually take this seriously when this is the kind of economic policies that they're proposing? And we're in one of the most like dire economic times, right? Like I know officially the government has not announced that we're in a recession or anything, but like, let's face it, like this is one of the worst like economic times. If you try to like go find a job right now, like you can't. And it's like there's people getting laid off, and there's just like people using like food banks and food kitchens and stuff like that, like at record highs. Housing is skyrocketing. Like we have all these problems, economic problems, and then the Democrats come out with this. It's ridiculous. But yeah, we're running out of time. Tristan, do you want to add some final thoughts on the RFK thing, and then we'll wrap up?
I think that it makes a lot of sense for him to drop out, because I think that splitting the vote to any degree in this kind of scenario is not really in his favor. So I think that regardless of who he wants, I think that having him in the race is not really providing much value at this point. So I think that it makes a lot of sense for him to drop out and put his backing behind whoever he is most aligned with.
It's probably not the Democrats, just say.
Probably not.
Yeah. I mean, I don't know if you'll actually endorse Trump. It looks like, I would say there's probably like more likely than not, actually. I say that there's like a 65% chance that he'll endorse Trump. And then the rest, he'll just basically drop out and say nothing. But we'll have to see. The speech is tomorrow, so that will be revealed very soon. But yeah, anyways, Dom, do you have anything else to add? If not, we will wrap up. All right, so if you have nothing else to add, we'll wrap up for tonight. So let me pass it to Dom anyways, for the outro.
Cool. Okay. So hopefully you guys enjoyed today's podcast for today. I'm sure we did as well. So please be sure to leave a like, comment, and subscribe to this podcast as well as our Clips channel. And with that being said, bye.
Have a good one.
Thanks for watching. See you next time.